Is that the one? Is software ETF, and it got down to I think 75 in the big sell-off. Software was really under a lot of pressure. It has reversed. It's back up to 80, close to 85, I think. When it was down around 75, I put out a target of 110 on it. So it can, it'll perform okay. It's not going to lead like semis have, but it'll have a nice bounce. And that 110 is still far below its old high, the high it had before it rolled over. I think basically you're putting in the top in software, but it got so oversold that there's a room for it to run as the market runs. So, it's kind of a middle of the road type group right now. But 85 to 110, that's probably 30% or more. That's not a bad move if you get it in the next 3 months. And then the one area, obviously, that I like a lot, one other area is miners. Because I think gold and silver have big runs here. As I said, I raised my gold target 6,800 in a couple steps. I went to 5,500, I think, in my January letter, and then 6,800 soon thereafter because of what happened in January. So I'm at 6,800 on gold, and I'm at 180 on silver. I had raised it from 100 to 125 in January, and then raised it to 180 after the sell-off in early February. So, and I think, that you probably know this, there's a couple estimates out there. One in particular, Michael Oliver, who's calling for $300 to $500 in silver this year. I can't get there in my work, but I don't rule it out. Silver's got a lot of upside one way or the other, whether it's 180 or whether it's something well above that. I think silver, and as a result, if the metals have that kind of upside in the next 3 to 6 months, that means the miners have a lot of upside. And I think you're going to see the miners in some kind of the silver miners. I have a target on SILJ, which is junior silver miner ETF, of 90. That's down in the low 30s. That's almost a triple from here. And I've got GDXJ, I think, is selling in the mid 120s, 125, sick. And I think that can go to 250. So that's basically a double. So the miners look strong here. I think there's a lot of upside. They're selling off today. I actually saw this in the charts. It's a short-term sell-off. You could get down to 80 on silver. May not go that far. Got down to 84, I think, this morning. And whether you have more weakness tomorrow and the next day, or tomorrow anyway, or whether this thing reverses from the lows today, I don't know. But, downside is at most, say $4 or $5, and the upside is big. Certainly gold normally would be a safe haven. I think it's because the run up in oil really increases, oil is a big cost factor for mines. That's one thing. And number two, I just think it's been a risk on trade, particularly beginning with that December run up. Gold and silver just took off on a risk on move. And so I think they're being viewed just like the equity market was during the correction, as risk on trades. And so with Iran being the center stage story, it became risk off in both equities and in metal. Obviously equities have reversed here. So have the metals. They're not at all-time highs yet. They have a long ways to go. I think you'll get there. You might get there this quarter even, which means the next month and a half. And if not, you'll get there this summer. And you might, like I said, you might top by Labor Day. Doesn't have to. My targets are basically this year, but yeah, I wouldn't be surprised if we have a big run up and get to the highs by Labor Day. Yeah, I'm just saying it could get there by Labor Day. I'd be very careful. I have to guard against this because people hear a word and then all of a sudden, you said it would top by Labor Day. No, I didn't. I said it could happen by then. But what I say is, and particularly talking about the equity market, tops are a process. Could we go straight up and straight down? We could. More likely, historically what you see is that you get up to a top, and then it's a process. You might sell off, 5 or 10%, and then go back up, make a double top, or you might go back up and not quite get there, and then roll over. So it's hard to say exactly when this thing really rolls over hard. It might be, it could be in the fall. It might be in the winter. It could be, 2 days after we top. But I think I can see a top coming months. And I think in the equity markets, certainly could see it this summer. When that turns into the real sell-off where I'm calling for an 80% bear market. It doesn't mean it's immediate. It might be that you kind of back and forth for a couple months before you roll over. I don't know. I'm not saying that will be it either. It can take any shape once it makes its stop. So, but either way, I'm pretty certain that, whether it starts later this year or in 27, 27 is going to be a tough year for equities, for the economy, probably for the metals, among other things, certainly for lesser grade bonds. If we go into a global bust, junk bonds are going to get hit hard. Private credit's going to get hit very hard. Private equity is going to get hit hard. Real estate's going to get hit hard. It's going to be next year, I believe, is going to be a 2008-9 story, except maybe worse because of the leverage in the system. Meaning 2008-9, we had lots of leverage and it caused the real problem we had. Our leverage today is so much beyond what it was in 2008-9. And leverage works both ways. It leverages your good returns on the way up. It really hits an economy and a financial system hard on the way down. So that's why I call this, what's coming, I think, a global bust. I raised them in October of last year, and my equity targets are still the same, although I think the odds are pretty good. I'm going to have to raise at least the NASDAQ, maybe the S&P, maybe all of them. I did raise my metal targets in my January letter, and then when we had that huge run in December, January, and then the correction, I raised them even again. So we can go over that later, but that's where I've had to increase. I've increased a few sectors, but this market is in its melt up phase, and I think there's more room to go than I thought. Even we came out of the correction, the March-April correction, where we, because of the war, pretty much you can look at it, right as the war entered, started March 1, the thing rolled over and went south, and people were getting very bearish and talking about the highs are in, et cetera, et cetera. I remained pretty bullish. I said, we've got a correction. We can get down, 7 or 8%, but it ended up the S&P down almost 10, I think 9. And from there it reversed and hasn't looked back. And I think this move out of that correction is that parabolic melt up. If you look, it's gone very vertical here in recent weeks. And I think that's only going to continue into the summer months. So I think, my 9,500 could be reached by July. And if I have to raise it, I'm not going to be raising a huge amount, but I think you could see a top this summer. And like I said, it's less about who's on the Fed or who's heading the Fed. It's more about what the last 15 years has looked like. And I think it's human nature that they're going to be fighting that war. And I mean, Powell during his term pretty much said, we'll never go back to QE infinity. We're not going to repeat those mistakes of the past. The problem is, if you get into a bust, which I define as something bigger than 2008-9, you have to go back there. It's not by choice, but you have to. And yet, if they're reluctant to do it, every week that they delay it is going to exacerbate that downturn. So it's less about the personalities. It's more about the cycle we're heading into. I think it's pretty much taken place already, and it seems you're not going to have major things. Now, China sounds like they may help a little bit behind the scenes with Iran, try to encourage them to end this thing and open up the strait. You've got some, China wants us to kind of go their way on Taiwan. That's not going to happen. We're not going to commit to anything there. And so you're going to get, some agreements on some of the things each side wants. The rare earths, we want some agreement that they're not going to withhold that. In the meantime, we're going to open up a little bit of our chip technology to them. We're going to be able to sell. They're going to be able to sell some. They, meaning the tech companies, sell some chips to China. Nvidia in particular. And so you're going to get some things on both sides. We're going to get a big soybean order. I think you're going to see. I think it was announced that China's going to order 200 of Boeing's planes, which is maybe a little bit of a disappointment from what they expected. But ultimately, I think that's what you're going to see is trade deals and kind of an agreement between Trump and Xi that they're going to try to be less confrontational with each other, that the countries can mutually benefit if they're, a little bit less hostile towards each other. So, we'll see. I don't think anything major came out of this, but again, if it helps in ending the Iran situation, that's a good thing. I would say just be careful. We're in the last stages of this, as exciting as it is, and as much as I have numbers way above anybody else on the street, 9,500 could soon be 10,000 on the S&P, and that's still 25% or more away. Don't get caught up in this and think you're going to hear at the top, I'll be turning bearish, but you're going to hear at the top people telling you this thing has years to run, that they'll give you all kinds of good story on AI. They'll give you a good story on, interest rates coming down and oil coming down, and that we're kind of in the great new world where you can have your cake and eat it too. You're going to have all kinds of good stories, probably in response to the Iran war ending. I think that's going to give us that final spurt. And it's going to be hard to argue with the good news. It's not going to be easy to sell at the top. So I just caution people. I think you're months away from a top, meaning could be this summer. Just don't get caught up in this